Hello and welcome to the Halifax Real Estate Podcast. I am your host, Jason Paul, licensed realtor in Halifax since 2017 and team lead of the Infinity Real Estate Group at eXp Realty of Canada, Inc. This podcast was created to help you understand a little more about the Halifax and Nova Scotian real estate markets. If you like what you hear, I would really appreciate it if you hit the subscribe button. Thank you so much and enjoy the show. The government of Nova Scotia has announced a new down payment assistance program for first-time homebuyers. By partnering with local credit unions, Nova Scotia is now offering 2% down payments to first-time homebuyers, rather than the minimum 5% down payment you see today. This is designed to help make homeownership a little easier for those trying to get into the housing market at an all-time high home prices in Halifax and in Nova Scotia. Matt Legatto is back on the podcast to help me break down whether this is a program that Nova Scotians should be excited for, or if it's a program that they should avoid entirely. Enjoy. I'm gonna let you know we are live now, so
Sure,
take that with a grain
Yeah.
of salt. Welcome back, 2026.
What a good year.
First pod, technically second pod. The first one sucked. We're not.
Technical difficulties on the first. Yeah, we'll do a redo on that.
Audio quality was dog shit. Okay.
No, not blaming anybody, of course.
No, I'm blaming your lack of a microphone. I think for I don't know when one day a microphone from Amazon's just going to arrive at your office because you're now too much of a regular to have bad audio. It's inexcusable.
Sorry. Listen, if there's technological issues, I'm usually right at the forefront of them.
So
I like to lead the pack.
Okay. Starting off 2026 hot with some fuckery. We have an announcement from the Nova Scotia government that I'm going to read this. I'm going to read the headline because I know you're well versed in this. So Nova's first time homebuyers program pilot project. I think that's a key word here. Pilot project.
Yeah.
They're testing it out.
Yeah. It's a test. All right.
The first time homebuyers program was created to make Nova Scotia's first home more affordable and to help Nova Scotians achieve homeownership faster. So essentially what this means is they've gone and made it first-time homebuyers now qualify for a 2% down payment in the province of Nova Scotia when buying their first home. That's the headline. You and I have seen countless realtors share it, countless mortgage brokers share it, countless people in the real estate industry share this. And I love I love the Instagram stories of look at this exciting project.
It's a game changer.
More.
It's a game changer. Listen.
I've seen four game changer quotes on Instagram.
All I can say is if you think that this is a game changer, you must have just had your mind blown when they came out with the Star Wars Monopoly board. Because what the fuck difference is between that and the Monopoly that came beforehand? And back to the statement where the government's like, oh, this is going to lower pricing. This does absolutely nothing to make houses more cheaper. It just allows you to get into a little bit more of into a more expensive house. That's all it is. It's not it's doing nothing to the price. You'd have to be whatever they're talking about trying to pull out of these weed stores that shouldn't be operating. You're smoking that. If you think that this does anything other than just make politicians say that we've done something and it's going to make things better. Well, congratulations. I just moved things around like this on the board and I'm look, it's a whole new board. No, fuck off. Sorry. Fired up already. Was there a question in there?
No, general statements.
Yeah, so that's my starting point. Yeah.
I have our first Instagram clip. That is the clip. All right, so clearly you hate the product. So okay, when it was announced, it was hold on. I'm gonna tee you up because I know you're fired up because we had another topic that we were gonna do and you want to do this instead. So last week this gets announced. You and I are both on socials. We see all the realtors sharing it, all the brokers sharing it, everyone saying game changer, great product. This, if you're thinking about buying a house, call me. Okay. What is it? What is this thing? How does this work? How do you have a 2% down payment in the province of Nova Scotia for up to $570,000 in HRM and $500,000 for outside of HRM?
The most incredible part, when this thing got announced, I wasn't in the country. probably a strategic move by the government. They were just like, Matt's not here. Let's fucking do this now so he can't snap his crayons right now. We'll give him a week to come back and do it. I'm literally sitting there with probably 15 bank reps because we're at a conference. They're all there. I literally pull the phone up and I look at them. I'm like, how the fuck's this work? And their response was, I don't know. How the fuck does that work? Is structurally, normally you put down a minimum 5% down payment. So now all of a sudden it's okay, well, we're going to reduce it to 2%. The government's going to guarantee the other 3%. So the government's stepping in to bridge the gap on the 3%. Oh, and the big selling point. This is the fucking best part of this game-changing thing that everybody's talking about. It's going to forego the mortgage insurance premium.
I did see that.
It doesn't go away. Like, just because you say it out loud doesn't make it true. That client's not paying for it. Okay. Yeah, I get the person doesn't have to pay for it. Somebody's paying for it, right? So the government, by them stepping in and saying, we're going to backstop this mortgage to 90% of the loan to value. Okay. So for lack of a better term, you buy this house at 2% down. Congratulations. You saved 3%. You're
Hold
mandated.
on. Hold on. I want to backstop this because you're gonna get into some stuff. So I'm gonna backstate this with down payments. I'm gonna break down down payments very quickly.
Yeah.
In the 80s, you had 20% down minimum on 30, 40, 50, 60, $80,000 houses. Everyone's making $3 an hour. Government went to banks and said 20% down's too hard. What can we do? 90s, 5% down payment came in, but insurance backed mortgages
So
because the
exactly.
bank
So
said
they base
20% down. Yeah. Is
100%.
wait,
So they
anything under
basically,
20?
yeah.
Yeah, fine. Go.
They
But I was just
basically
gonna say
say minimum 5%. And the way that we're going to be comfortable with that is you're going to get mortgage insurance. So let's be very clear to everybody out
because
there.
because there's not enough skin in the game from the purchaser for us to feel confident in them that they're not going to
100%.
foreclose.
The bank,
And then we're holding the bag.
the
That is
bank,
down payment.
as soon as the bank wakes up in the morning, the only thing on their mind is risk and making
Yeah.
money.
Yeah.
We were afforded the opportunity through those new changes to be able to put 5% down. Okay. So that makes it accessible now for us to be able to get into these mortgages. Because guess what? Housing prices went out of whack from compared to the 80s and the 70s and the early 90s. So with that 5% down, you cover the mortgage insurance premium. What that means is it starts at 4% and it tapers down once, right? The percentage of the mortgage, 4% of it is what you're going to be charged as a fee. That's tacked on to the mortgage. So after you pay your down payment, they're going to slide that mortgage insurance premium onto the purchase price and work it into your payments for the duration of your term or your amortized period. That gives the bank the reassurance to know that if you fuck off on that mortgage or if something happens, they're getting paid. Let me be very clear to everybody. Mortgage insurance premium does not protect you. It protects the bank. And because it protects the bank affords you a very good rate. That's why you see the most attractive rates at those low percentages down, or if
Thank
you
you.
put an incredibly large amount down, because it swings in the opposite direction when you put 35% down. But if you're putting that minimum percent down, so from 0 to 19.99%, the bank knows that their ass is covered by the mortgage insurance premium you're going to pay. So risk
The other
mindset,
thing,
they're like, less risky. I'm going to give you a good rate for that.
the other thing is you get better rates if you go below 20%. The other thing though, you don't usually get an appraisal below 20%. Everything
You,
above 20, I usually get an appraisal
you
because the bank's on the hook for the whole loan.
the appraisal, again, so this is another thing where the appraisal still exists and it still happens. You just don't pay for it. The insurer
Yeah.
does. And so the
Yeah.
bank, again, is getting all warm and fuzzy because they're like, oh man, this mortgage I'm going to pump out, it's covered by the insurer. Oh, and the appraisal that's needed, this guy's going to pay for it too. So that's why when you get to 20%, because we always have the conversation, people are like, well, I'm putting 20% down. Why is my rate higher? Well, because risk mindset of the bank, guess who's paying the mortgage insurance premium now? The bank is. And the bank doesn't do anything for free. So what they're going to do is they're going to give you a little bit of a higher premium on the rate, and they're going to cover that mortgage insurance premium. Because again,
Yeah.
they want the certainty to know that the mortgage is backstopped by some fashion. So with this new fugazi of a program, they're basically saying, okay, well, the government's like, we're going to be the backstop.
Yeah. So I want to bring it back to the premise now because we've educated people on down payments. So now the claim is we've gone from 5% down payment to 2% down payment, which is crazy. And no mortgage insurance is the claim. So
So,
now,
yeah.
now tear it apart. Go,
Well,
dog.
the mortgage insurance still has to exist somewhere in the world. So, like, yes, for the duration that you stay with the credit union, it's covered because the bank's going to deal with it. Okay. So, the bank in this program, or sorry, the government in this program says they're going to cover 90% of the loan to value on the house should you default. They're essentially doing what the insurer would normally do. Actually, the insurer would cover the whole damn nugget. But the government's like, well, we got to be fiscally responsible. We're only going to cover 90% of your $500,000 house because prices are way out of whack. And this, again, does nothing to do anything for prices. All this is going to do is increase competition now that people can get into an entry point that they couldn't before with a lower down payment. So now you're going to have more hands in the cookie jar trying to get that fight over that price. Okay. So, but here's the trick. If you ever want to leave the credit union or whatever select bank this is with, and it's all credit unions.
It's all credit union. It's only a credit union.
Cool. It is no other bank is playing by these new rules. And so
No.
when you go to take that mortgage somewhere else, and you still do not have upwards of 20% equity in your house, in which, and I mean, again, math is a real son of a bitch, with 2% down, it's going to take you a while to get to an accumulated equity position in your house. And for layman's terms, it's going to take you a while to pay enough of that mortgage off so that you have 20% available in equity to even be able to do anything. Because equity in a house is only when you get to 20% and above. Right? When you have 20% and below, congratulations, there is a roof over your head and you have an asset that's tied to your name. But you do not have the ability to do anything really with that asset until you get to 20%. Banks won't look at it until they say there's enough skin in the game. So if in the time period from when you get your 2% new mortgage to when you then want to shop it in 5 years, because by the way, the credit union's only going to give you a 5-year term, and you're not going to have it paid off to 20% equity level in the first 5 years. When you decide you want to go to another bank, they're going to look at you and say, cool, fucking pay the mortgage insurance premium. They're not playing by the same rules as these guys. So like you will be hit with that premium. Now it could be 5,000, it could be 6,000, whatever that percentage of it is, but you're not avoiding it, right? It is a
No.
universal truth that it has to be applied to the mortgage when you have less than 20% equity. So
Yeah,
then
banks haven't waived it. Banks have not waived it. It's
no
just
other
the Nova
banks.
Scotia government. It's like credit union Nova Scotia being like, how can we
It is
fugazi this for a better
exactly
laugh, for lack of a better
100%. I was trying to be politically correct, so I used fugazi this time. But it does nothing to do with purchase price. It does nothing to do with affordability levels. It's like we don't have like, oh well, yes, I get there's a down payment issue, but the true issue is the price. Right? Like if the
Yeah.
prices weren't where they were at, the down payment wouldn't be so much of an issue. So now prices have gotten to a point where we're just like, okay, it's almost like gas prices, right? Like 20 years ago when you got your first driver's license, you paid like what, 70 fucking 3 cents a liter for gas. And it's like
I
we
was,
went
I was,
but the general
yeah.
population went ballistic when gas got to 80 cents, 90 cents. I remember, I think it was maybe high school, everybody was like boycotting buying gas for the day as if we were just going to bring the oil and gas industry to their knees, right? And of course, what happened? We got desensitized to it. So now nobody even fucking flinches when it's $1.40 something at the pump. Nobody flinches when it's $1.50. The same thing has happened to real estate prices across the country. Nobody flinches. Like we've become so desensitized to just the price that it's like we're not affecting the price. This is just moving the pieces on the board so that you can get in at that same ridiculous price point a little easier. But it's not really that easy because in the same breath, they've restricted the debt servicing covenants. So if structurally in the country we have a debt problem, we have a price problem,
Yes.
right? What they're saying is, well, we acknowledge prices are crazy. So what we're going to do is we're going to let you put less down. And we're going to jump in there with you and we're going to guarantee this mortgage for you and you're going to get in there. Oh, but PS, the ratios that we would normally apply to you we're going to drop those by like 5 points apiece because it's supposed to be, 39 and 44 or, 39 and
Yeah.
right, 40 or whatever. Um, now sorry, yeah, 39, 44. So they're dropping it to 35 and 40, right? So
Credit
they're,
unions dropping debt servicing?
yes. So like the debt servicing ratios that we would normally see are not the same. So they've lowered the debt servicing. But guess what? In the same breath, they're like, oh, yeah, but we'll allow incomes up to 200,000 to do this program. Well, no shit, Sherlock. You would need an income of that degree because we all know we are a heavily indebted group of
Yeah.
folks in this country. So they're like, well, while we lower the threshold for you to be able to put the down payment down. Oh, and we also like lower the debt servicing covenants because the bank's like
Hold
risk,
hold
risk,
on, hold on, hold on. Just I'm gonna stop here because now I've got a question. So debt servicing ratio. Once again, for the people in the back who may not know, debt servicing ratio is to make sure you do not go bankrupt under the weight of the affordability of owning a home.
nailed it.
Maintenance costs, utility costs, property taxes, mortgage payment, home insurance. They don't want you going to lose the house.
To a
Now,
degree, yes. Like, so what they'll do is it's basically making sure they don't bury you. So like you're
right,
you're you're
right.
39%, you're 44, right?
Yeah. Okay. So here's a question. If you lower debt servicing from some standards 39 GT gross debt service and then TDS is 44.
Yeah.
So, okay, cool. If you bring it down to 35 and 40, doesn't that make the debt service ratio tighter, meaning that you can't carry as much debt
That is
to service
exactly what
it?
it means. I mean, I didn't see it in
Okay.
any of the videos on the Instagram, stories that I seen where everything this is game changer and everybody should be buying a house tomorrow. But yes, that is effectively what happens with the fucking math
Yeah, okay.
afterwards, Jay.
Okay. Just so I'm clear there, essentially, so if you bought a house regularly and you had car payments, loans, maybe some credit card debt, but you fit within the 39 GDS gross debt service of 39% and TDS of 44%, bang, you can buy a house. But
So
under this new program with the 2% down, you may now have to deal with some of your other debt to fit in ratios.
what
Okay.
the 39 is basically a measurement of what you take home in the run of a month for pay. So what your pay is for the month, no more than 39% of that money can be used for the
Yes.
mortgage. No
Yeah.
more, you know what I mean? A maximum of
Yeah.
39% of that. That makes sure that they don't bury you based on your
Yeah.
pay. So then when we factor
Yeah.
in anything that pulls on your credit bureau, like your car payments, your loans, your lines of credit and all that stuff, we can bump that number up to 44 to account for that. So all that being said, now they've lowered it to 35 and 40.
Now it's tighter because
Yeah.
credit union is now being like, we're taking on they're just taking on people with less money. And when you take on people with less money, banks sniff risk.
It's all risk. They wake up in the
It's
morning and
risk.
they just say risk. They have a cup of coffee and they're like, risk, risk, risk. Like that's all they do every day. Like and so like this was the sell. Okay. So the government came to the credit unions. And why did they go to the credit unions? Well, the credit unions are community backed banks, right?
Yeah.
They're in the province and no
Yep.
national institution would ever fucking get on board with this.
What ever do this?
No,
There's
because,
no national bank
right?
would ever waive mortgage insurance. There's
No.
no way
So
for a
like,
2% down payment. There's
it
no way.
so they go and they're like, okay, let's team up with the locals. Okay, so that's awesome. So then they're like, it's like that Lewis Black skit where it's like, I got a really shitty idea, and then somebody chimes up, and I can make it shittier. And like, so then they go to them and they're like, okay, so we want to do this. And they're like, but we don't want them to pay the mortgage insurance premium. And the bank's like, well, somebody's got to make sure my ass is covered. So the bank says, okay, or sorry, the government says, yeah, okay, I'll cover 90% of the asset. So if in the first 6 months to a year or whatever the time frame is, and you default on your mortgage, maybe if it happens,
Yeah.
the government will cover 90% of the value of that for the bank. That still leaves a
Yes.
difference, right? Like, so like
Yeah.
for numbers out there, guys, that nobody mentions in these videos, between 90 and 98 is 8%. Who's covering that? Well, it's the bank. So then the bank's like, again, I don't do anything for free. I'm the bank. So what am I going to do? I'm going to restrict the debt covenants so that way I can kind of weed out the ones that are like super leveraged. So the risk of this actually happen kind of goes down, right?
And the other thing I'm gonna do is I'm gonna bump the income needed to 200K.
Well, because again, The government doesn't say this in their star-spangled fucking press releases, but they know that the income hasn't grown to a degree that these houses are affordable. So they're like, what we're going to
Yeah.
do is we're going to stretch it to 200,000. I tell you right now, if you're making $200,000, you should not be going for this program. If you're making 200 grand, this is not the program
And
for
you
you. These are not the
and you need
droids
to
you're
and you
looking
need
for.
to if you make two if you have a household income of $200,000 a year and you need the 2% down payment assistance program, I don't you should just sort out your finances.
It's brutal because, like, I flip about it because, again, it's just I get more cynical about the money side of things than, like, the flashy videos of, like, everybody wants to buy a house. I get it. Certain, like, there's those in the industry that have to sell the house. There's those in the industry that have to sit in front of a client, comb through their finances, and figure out what's going to happen to them once they have the house. Okay. So for me, the first thing out of people's mouths is like, okay, well, when I buy the house, can I put a HELOC on it, or can I do this? No, you can't. You don't have a pot to piss in until you get to 20%, and they've just lowered it to 2. So you're going to sit in that house, like whatever upward mobility that you and I would talk about on another podcast about properties,
Equity. Yeah.
equity. You don't have it, right? And then if you do want to shop and go to another bank afterwards, you're going to get punched in the face with the same mortgage insurance premium they're telling you now that they took away. They didn't take it away. They've absorbed it themselves, right? And so, but again, it doesn't fix the math on the monthly payments. Like, so then again,
Right.
you have to, okay, so now we're going to look at a person who has struggled to find the down payment, struggled probably with income. And now we're going to be like, okay, we can do this. And by the way, the caveat you have for this is a mortgage premium or a mortgage rate a percent higher than what everybody else is going to pay. You cannot stretch your amortization out, which actually does help with cash flow in the run of a month, right? And you can't do all those things. Well, like, who gets a fucking thank you card after that?
Right.
You know what I mean? So,
Right.
like, then all of a sudden, like, so the demographic of the if you look at it linearly, and over here I'm making 200,000, and over here I'm not. These are the crowd that you're trying to help. It's not
Right.
helping them.
No.
These are the
No.
crowd over here that are actually, if you're making 200,000, unless you've made some pretty terrible life decisions with debt, you should be in good spot, right? Like, unless you know what I mean? Like, everybody, listen, you know, side by sides and trucks are sweet, right? But, like, you should be in a position where, like, putting the 5% down, putting whatever down to actually have a position in the home that's effective for you is a much better position to be like, oh, I'm going to throw 2% down.
Right. Right. I'm just reading through it now, and for anyone listening, like, the link will be in the show notes if you guys wanna read this yourselves. 630 credit score or more. 630 is low for a credit score from a bank. Bank's like 700 and up.
Um,
So
you can go
that's
as
who you're
I've seen lower, like, we've got banks that'll
Yeah,
say
but
6.
when you go that low from a bank, it just means the interest rate's jacked up.
Well, the interest rate and the down payment they look for, right? They want to see
Right. It
20% down.
um,
So what's that
I
tell you
would
though? What does that intrinsically
hold
tell you,
on,
Jay? Like, what does that
hold
tell you
on.
when they're like
This is
630?
a yeah, but how to apply. I like these 2 paragraphs. This is a government program. They've announced it as a government program. You do not need to submit any application to the government for this program. Program eligibility and enrollment is completed as part of the mortgage application process completed by credit unions. So it's a government program, but they're not handling anything. You have
Yeah,
to go to the
unlike the
credit union.
DPAP, like the current down
Yeah,
payment assistance program where you would go for your
we're
5%
gonna
down,
get there.
there is an actual application. You go and you meet with them in the office. This will be handled strictly at the bank.
So program participants may renew their first-time homebuyers program backed mortgage with a national bank or major lender once at least 20% of their home's value has been paid off. That's like credit union must love that statement. Like that must just be
It's
like
created a client for a long time for the credit union. I don't fault the credit unions in this, right? Like, the credit union was approached by the government, and, like, I get it. They're community-based solutions lender. They're not always as streamlined as you would see with other banks. The rates tend to be a bit higher, but they'll do things in rural areas and tertiary markets that,
yeah,
like, most lenders wouldn't do because they just never heard of the fucking town. But like these guys, I don't fault the credit union, and I understand why they've structured it this way because again, a bank is all about risk and making sure that they exist tomorrow. So like you could still bank. Um, but it does nothing to make things cheaper. You know what I mean? It doesn't. It's just it's not. It doesn't. Like, and I mean that's it, and that's not just me being like a cynical arsehole. It's like literally look at the numbers. Look at the actual numbers. Compare what a 5-year fixed rate is and a 5-year what they're going to give you at 4.99. What your payments are, what you pay in interest over your term.
Well,
It's in the numbers.
it's in the numbers. One thing you can even say is like you talk about accessibility of houses to the population. Dropping it down to 2% does not make houses more accessible at all. If you want to make houses more accessible, drop the price or build low income housing. But build low income housing at scale. Like there's no way that just making houses more accessible to the current prices that they're at helps anyone in the lower bracket of incomes. It
It
doesn't help
helps.
anyone.
It helps the seller. It helps
Fuck
the
off.
seller. Yeah, because now the
Fuck
seller's
off.
going to have instead of 5 people bidding on it, maybe 7, right? Because now some
Would
people
you
like it's you know what I mean? It just
if you
allows
if
access to a
hold
number
on.
that was never going to be accessible before. Like if you
I got a scenario.
it's just
I got a scenario. Say I was selling your house. Say I was the privileged listing agent of your house, which I will be.
you have tried. Yes, you
Um,
have tried very hard. I need to live in
um,
it.
and we got offers. Let's say we got an offer, and we asked for the pre-approval mortgage letter, and it comes from credit union, and we both know what that means. How's your confidence on financing as a seller?
If I was the seller and I didn't work in this industry and I just saw a letter that says
You wouldn't care.
I'd
You
be
wouldn't
all
care.
right with this. I
Yeah,
know
yeah. If you
like
were ignorant,
credit unions can be
you're educated. You're
problematic
educated.
sometimes. Credit unions they're not as it's not as a streamlined process with credit unions. It's a bit more and again, when you grow up in a small town in Nova Scotia, you just remember the credit union. Like there was always a credit union summers, right? And you went in there and it was like super sleepy. You know what I mean? Like it was just not much activity, couple little old biddies behind the counter. That's exactly what it's like to run mortgages through it. It's very, you know what I mean? Like that hasn't caught up to the times. So
Right.
to me, when you have to go through a credit union, there's always a little bit of, but again, they're the
Now,
solution, right? When you need it.
the other thing, when you buy a house and with a standard 5% down payment, you get to choose between a fixed rate mortgage or a variable rate mortgage.
You get to choose, yeah, variable. You get to choose variable, fixed, term, whatever.
Yeah. When you buy with this product, this 2% down, it is automatically 5-year fixed.
It's a 5-year
And you
fixed
can't even,
at
yeah.
4.99. So like posted 5-year fixed right now is like 4.5. You know what I mean?
Well, okay, if you're 4.5, 0.5 basis points isn't far off.
Sorry, 4.05.
Oh, well, now we're 95 basis points off. That's
Yes.
a difference. That's a
Yes.
swing.
Yeah. So like
Okay.
highest 5-year rate I see right now is like 4.09. Lowest you see is like
Okay.
4.044, right?
You're locked in. You're locked in for 5 years.
Mm-hmm.
You have 18% of equity that you have to gain in the property. So you're praying for market to go up. That's what you're praying for. If you're ever going to reach 20% equity in that house in your 5-year fixed term at 4.99%. So you're locked and you can't even shop the rate. You can't even argue the rate. You're locked in for 4.99 at 5-year fix. That is your rate. And that is a full percent higher than what the big banks are offering you.
And they have a threshold in there where they can't go more than prime plus 2.
Okay.
I mean, like, uh, I don't know if that's supposed to make me feel good or like, okay, fuck. So like you won't go up to 6.5? Like, what is that? Like, what are you trying to like? It's like,
So can they, but when you walk into a fixed rate mortgage, you're locked in 4.99. What you're saying is, can they go up in the term of that mortgage? No, they can't. It's fixed, right?
no, yeah, your rate can't move in your term.
Okay.
The
Okay.
rate
All right.
like the rate environment can move,
Yeah.
right?
But okay.
But
Now hold on though.
you won't change.
Let's go devil's advocate here. Or actually, I want to dive deeper into the long-term projection of this. Because if you lock in for this for 5 years and you need to recoup 18% equity and you do nothing to your house. So it's just principal pay downs, which most of that's going to interest. Okay. In 5 years' time, likelihood that you have 20% equity in your home, I would say small.
Oh my God, no. Yeah, I ran an amortization this afternoon for it. It
So
was pitiful.
hold on. Well, I want to get to the numbers, but what I'm going to say is then you have to re-sign a credit union because they're the only ones that'll fit.
You don't here's another trick
Okay.
I seen some say that you have to stick with the credit union. You don't. You can go elsewhere, but you will pay the
Uh,
mortgage insurance premium. That pesky number that was like, "Oh, it's a game changer and we're not gonna have to pay it anymore." No, man, it still exists. As sure as God's got sandals, somebody is paying for the mortgage insurance premium, okay, when you're less than
meanwhile,
20%.
meanwhile, meanwhile, God's wearing flip flops.
Well, yeah, you know what I mean? They're Velcro sandals, but it's just like you have to pay it. So, like, if you do wanna leave, you can leave. But when you go to another bank that's not a credit union, they're gonna be like, "Cool beans. Somebody's paying the mortgage insurance premium. You only have 8% equity in your house," right?
Right.
Or
Okay. So do me a
7% or
favor.
whatever.
I know you ran numbers. Give me the numbers that you ran because you did homework,
Well, so
and I
at
want to make
400K through this program,
purchase price.
purchase price, let's say 400,000. Because like you can do max 575 in the HRM, and you can do max like 500 everywhere else.
Yep.
But again,
So 400K purchase price.
400,000. Your payments like $2,277,
That feels high for 400,000.
right? If you had just got 5% down through the program at a
Okay.
4.09 5-year fixed, which is the high end because I'm seeing 4.04, you're
Yeah.
$200 less on a payment monthly.
So 2,400. So $2,400
No,
a year in savings.
2,000. Your payment goes down.
Uh,
So if you don't
So I
use
said
this program,
24,
yeah, yeah,
24, 2,400 a year in savings.
yeah. Oh yeah, sorry, yeah, 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 yeah.
Yeah, math. I can
Yeah.
do it.
Sorry, I wasn't listening.
Barely.
So the rage was in my ears, but
Just
not the
ranting.
words. Yeah, yeah. I'm like wound up. But your total
Okay.
interest, so in that 5-year period, the total interest you're gonna pay, 91,500 bucks and change.
Ugh.
If you had a gone the other route with a standard 5-year
Don't
fixed,
I don't even wanna know.
well, it's almost like fucking maths, right? Because it's 75,000 in interest payments. You'd almost be surprised. It's pretty much the difference of the mortgage insurance premium, right? So they're like, "Guess what? You didn't pay mortgage insurance premium, but I did get it in interest, Eddie." Because you'd almost think that somebody's gonna take that and use it for the fucking mortgage insurance premium. You know what I mean? Like, the bank is just a less flashy casino. They don't do things for free,
No.
like, at the end of the day, if they lose every day, they won't be there tomorrow, right? So it works the same, casino and the bank, right? It's just one pumps oxygen into the air and the other one sucks it out.
Which one pumps the oxygen in the air, the bank or the Reno?
Oh, the Reno, I love a good Reno.
It's
You
the
ever go to
Reno,
Vegas?
there's way too much fun at the
Like,
Reno.
it's the Reno. It's like 4 o'clock in the morning and you're in Vegas at the casino, you're like, "Why am I so awake?"
4 AM in it's 4 AM in Lower Water Upper Water Street, Halifax, and you're at the casino. Just anyway. Okay. So so you're paying more interest, you're locked in. What is the equity at the end of your 5-year term? Do
You
you
have
know?
no equity. You're at, like, I gotta
Oh,
pull
come
the
on.
sheet up again. It was like you were at, like, 3 something still, like, you were still in the high 300s. So if you bought the
Okay.
house for 400,000, you've only paid off 45K, so you're at, like, 360 grand.
Yeah. So 20% of what's 20% of fucking 400K? Oh, it's 80 grand. You need
Yeah,
to be at 320.
yeah, you're not
Yeah.
there, right? So
No.
it's
Okay.
just so
So
that's the thing,
you're
like
not getting out. You're
no,
not getting out.
Yeah.
Unless you went to okay, but you could go to another bank, go to a national lender or a big bank.
You can,
They
and
would
what they'll
just take
do is
they'll
they'll
just
do a
take the equity out.
calculation. Exactly. They're gonna do a
Yeah,
calculation of how much whatever your loan to value is, and they're gonna say, "Okay, you owe us, like, 2.6% mortgage insurance premium."
yeah,
And they'll say
yeah.
they'll tack that on the top of the mortgage, and then you go forth and you pay that.
Okay, so you hate this.
I hate how they describe it. Like, we're solving what did they say? We're lowering the cost of housing?
I didn't even catch the ad. I saw the realtors. That's what like I didn't see the actual press announcement. I just saw realtors being like, "Game changer. If you're buying a house, call me for more details.
Yeah,
Book an appointment today.
yeah,
Book a viewing. Go to
yeah,
my open house.
yeah,
Sell,
yeah.
sell, 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 sell. Great product."
It's
Fuck off. Fuck off.
they've solved the issue of, like, yeah, I can't find the other 3% because they've made 2 the target. They did nothing to solve the issue that I can't afford a $575,000 first-time home.
Yeah,
You know what I mean? Like,
yeah.
it's just not it does nothing to change any of that, right? And it's like, yeah, I just yeah, yeah,
Now,
like
okay, we'll put it to you this way: scale it 1 to 10. 1 being the worst product of all time, 10 being the best product of all time. Where does this land on the fuck off scale?
I'll give you a
I know where
4.
I'm at.
I go 4.
Oh, I'm at a hard 3.
Yeah, I'll go 4, and I'll tell you why. I've seen one shittier program than this that doesn't exist anymore, and it was when the federal government did it, and they actually held a position on your title. So this was the
On
thing
your
with
equity.
this.
Yeah,
Yeah, this was the thing with
yeah,
this one where they're like, "I'm a guarantor." Okay. So you can
yeah.
have a guarantor on title or you can have a guarantor, like, not on title, right? So I very much suspect the government is not going on title on your house, which is
Imagine
which is
Tim Houston.
the
Just
only good thing about this program is the fact that they're not tagging their ass on your house, right? Um, but it's just a disingenuous statement to say that this is gonna change
can
anything to affordability. Affordability will fix itself, okay? Affordability is gonna
it's
fix itself.
accessible. It's accessible.
Yeah.
That's it.
I
It's
mean,
accessible.
you've made
Yeah,
it
but
more
hold on.
ex yeah.
Like, that's all you're doing. You've just made home ownership more accessible to people that cannot save 5% down payment.
You've
But they
made
still have to pay closing costs, and they still have to pay 2%.
you have made it more accessible for folks to get more expensive houses. Yes.
Yes. Thank
Like,
you.
it's not
Okay. Can we can we highlight both of our favorite assistance from the government programs for buying a house?
sure, yeah.
Because there's no there is one like I this credit union one sucks. Let's just be clear. 2% down payment sucks. Everything sucks. Don't like it. Not gonna advocate any of
Is
my
that how
clients
I
to use it
came off
ever.
with that?
You're actually worse.
Sort of. Okay, sorry.
I told you that's our opening clip on Instagram for this podcast. Is your fucking 2-minute rant. Um, no one talks about this one, and no one knows about this one. The Nova Scotia Down Payment Assistance Program is the gold standard of down payment assistance programs in this province.
It's beautiful.
It is
Like,
by far it's the best program you could possibly use, and it requires no capital from you. You just need closing costs,
yeah,
which is 2 to 2.5% of the purchase price.
yeah.
If you go credit union, you need 4 to 4.5% the purchase price, right? So Nova Scotia Down Payment Assistance Program, have to be a Nova Scotia resident who lived in the province for a year. That's pretty reasonable expectations
It's
for
just 1
accessibility.
degree above 2 feet in a heartbeat.
Right. Easy. 650 credit score or higher. I like the higher credit score. Household income $145,000 or less. And you need to cover closing costs. Need to be able to be approved for a mortgage. The only difference is there's significant differences, but it's a 10-year 0% interest-free loan that you choose how long it takes you to pay off.
It's I mean, I hate to say it, but it's free money because you're paying it
100%.
back at 0%. Like, you have to
Yep.
pay it back, so it's not like,
Yep.
you go to Tony Soprano, but he's gonna charge you vig. but, like, at the very least, you don't like, so, like, if you were to compare this to, like, the first time home buyers plan with your RSP, you can pull your own money out of your RSP, and they've increased the maximum allowable contribution, and that's all fantastic, especially, if fuck the stars aligned and you were able to save that kind of cheddar. Um, but that's your money, right? So, like, you're gonna pull your money out of your RSP, and then every year at tax time, you have to tell your tax person how much you're gonna pay back into the program because you've got like 15 years to replenish that book. This is just the government's money. It doesn't affect your savings. It's just you take it from them. You pay it back every month. Now we debt service what that payment's going to be, the 150, the
Yeah,
$200 a month, again, because you're going to have to pay it. And then you're off to the races. And like, you go to the office, you meet with them. They're super nice. It takes a couple
the other
days to get in to
the other
see
thing
them. It takes, a couple days to get them approved. And like, I've never heard of a no. Never once heard a no.
right, right. The other thing is, it's 570K inside HRM, same thing as credit union. 375 outside of HRM, so $125,000 less than the credit union program outside. Um, the other thing, and this is just my thing, is I like that you deal with the government and the government. Like, I don't like the fact that, like, for the credit union 2% down, you have to go to credit, like, you have to go to credit union and be like, hi, I'm a customer. At least the government's like, hi, I'm here for some assistance that you said you're going to provide because I pay you taxes.
Well, yeah,
Great
it's
program.
it's like an actual vehicle that you can see the benefits for, and yeah, like you said, it's like, we've put into this, so like there should be like a something to it. This to me is just smoke and mirrors to say that we've done something, and here we are complaining about how much money the government's going to have as a deficit and everything else. It's like, okay, let's not have this program. Okay, let's take whatever money you think you've set aside for the next 4 years for this program, and let's go buy a fucking piece of land, or I don't know, any of the acres and acres and acres of land that the province already owns. Let's clear down some trees. Let's fucking use the hardwood for fuel for people that have fireplaces. Like, you know what I mean? Like, you know,
Yeah.
and then go build fixed costs pricing. Team up with a community group, team up with a builder, and go actually just build product that at the end will be set and priced at an affordable price and sold. No realtors, nothing like that. Just have it that it's just you go to your government office and say, okay, this is the price and this is the price. Not the first one's 250, the next one's 255, the next one's 260, the next one's 265, the next one's 300. None of that.
No,
It's just let's buy it, let's set it all up and have it. And you can have it run by a community fund. There's ways that the government can intelligently put the money around. This to me is, I actually don't think the program will last 4 years. I think it'll quietly go away from lack of use
the Nova Scotia down payment assistance program has been operating since 2016.
because that's a good
So it's
program.
because it's a good program.
Like that's a
Credit union, it is a pilot program. The only thing I really, really hope, and this is just the petty in me, any realtor that, and I've screenshot these guys, that Instagram story, game-changing program, call me today. I really hope when this program leaves inevitably in 18 to 24 months because no one's fucking touching it, that, we also get to hear, "Bad program leaves because of lack of use."
I don't like the fact that it's being called a game-changing program because that means you
Yeah, but
fucking think this is a game.
hold on,
This
hold
isn't a
on.
fucking game, man. Like this is people who are
What
desperately trying to get
realtor
into
hurt
a
you?
house. It's just to me the premise of it. Like, just the premise of calling it a game-changing thing. Okay, so this is some type of game for you. Because, like, to me, like, it doesn't structurally alter what the issue is for affordability. All you've done is made it more accessible. Like, I couldn't afford it before, now I can barely afford it.
Yeah, I couldn't scrounge the 7.5, but I can get to 4.5.
You know what I
All
mean?
it is Like, if you're saving money right now for a house, right? Literally, you're appealing to the market that does not want to wait. Because, like, if to get the 4.5% what is it, $600,000? No, $570,000.
575 in the HRM, yeah.
Yeah, okay, great. To get to 4.5% saved, I just wanna do the math because calculator. 175,000 times 0.045. That is still $26,000. If I go 575 times 0.075, which is for down payment and closing costs, $43,000. So it's all like if you don't want to wait, because let's say you put away 26K inside of 18 months and you're patiently plugging away at this. Like, now the carrot's there for you to seem like you can finally buy this thing because you've been trying to save money and scrounge pennies on the dollar to go buy this thing, and it's a dream of yours to own the white picket fence somewhere in HRM because you want to live here and own and get in on the equity game that everyone's been riding for the last 7 years. And it's such a bad carrot. It's fucking rotten.
If this has any if your argument is, "Oh, well, it makes attaining the down payment more attainable." Go get the
Nova Scotia down
go
payment
to the
assistance
down
program.
payment assistance program, they'll give you the fucking down payment,
Easy,
right? And
easy.
the funny thing for me is what, and I shouldn't say it's funny. The ironic thing that I see the government, there's 2 big swings in the numbers, if you've noticed. Down payment assistance program won't go to 500,000, right? Outside of the rural
Uh,
areas,
no,
right?
credit union will.
So to me, it's almost like if, well, if the government's putting their money up, they're like, oh, no, 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 I'm not going to that degree. Like, that, let's be serious. So obviously, they must perceive something with the pricing. You know what I mean? That it's a little off. So to me, it's like, it's just wholeheartedly disingenuous to say that this is going to fix pricing. It absolutely does nothing to make homes cheaper. It just makes expensive homes easier to get at.
The other thing, and like once again, so back to my thing of like if you save 4.5% on a $575,000 house, it's 26,000. If you save the 7.5%, once again, down payment 5% plus 2.5% closing costs, it's 43,000. If you just get so 575,000 in HRAB for down payment assistance program, 0.025% is 15K. And then you get a 10-year 0% interest-free loan that you decide the payments on. You still get the grade 1 interest rates of 4.05%. You still get to pick between variable, fixed rate mortgages, your terms. You're still with one of the triple A lenders in the lending industry. You get to work with mortgage brokers who will shop on your behalf. And all you have to do is 2-week condition dates, because we all love the Nova Scotia down payment assistance program. They are fucking slow with approvals. They take their time with getting that shit out.
Next time you go to that NSRA meeting or convention or whatever it is, when you all get together once a year, realtors, can you do a quick presentation on that? Because that's the hardest part of the down payment assistance program, is convincing the realtor that you need 2 weeks, even to the point where I've copied and pasted the literature from the government and being like, they want 17 days. And like, I get the arguments against it. The seller doesn't want to do it. I don't know. You might not get paid as fast. Like, I get it, but the government moves at the speed at which the government wants. Like, one of the first times I was doing the program, the lady we chatted to in the office, she was amazing. And then so she gets my clients in really quick for a meeting, and at the end of the meeting, she's like, "P.S. I'm on vacation." So then leaves, and so then it's like
Savage.
gone for the rest of the week. And like, they won't hand the document, like they wouldn't transfer it over to another person because they all have busy queues. And I'm just like,
Oh my,
this is it. Like, this is why they ask for 17 days, because
yeah.
their
Government.
vacations, they're sick, there's
Government.
whatever, right? So it's very much, but it is way, it's structurally just a better program, and it actually gives you the mobility to get into something if the down
Hey,
payment is an issue.
and there's like no hassle. Like if
It's
you can buy a
they
house
don't say no,
and you
man.
just don't and you just don't have the down payment. Like
They don't say
if
no.
you okay, if your realtor if you're buying a house and your realtor cannot get you 17 days on conditions just for down payment assistance program, if they can't sell that to the listing agent or the seller, quite frankly, you don't want to buy that house anyway, because they're not going to negotiate on anything found in inspection.
Yeah.
Two, if your buyer realtor cannot negotiate that, think about changing your representation. That should not be a hard ask, because you can always go, I'm going to get lawyer review, home inspection, home insurance, whatever fucking condition can all be wrapped up in 6 days. I will send you a waiver form for all those conditions, but I need financing as my down payment assistance program. The only thing about it is people get worried. The only counterintuitive of the down payment assistance program when you're selling a house is you're worried how financially strong the buyer is if they need 5% down payment help.
Yeah, and
You're worried they can get
I get the psychology side of it. So, I try not to get. Listen, I outline at the start that this is what they asked for, and and it's the same thing. I'll do everything I can to change that. And I've had some pretty rock star realtors that have done the program with me, and collectively we're on the phone with the office and being like, okay, guys, can we get an update? Can we get an update? Can we do that? So there's ways to get it within the 17-day window. But the grace of the government is just by saying it out loud, they're just like, we want the 17-day window. If they want to take till 16 and a half days, they fucking can.
That's their prerogative.
That's their prerogative. So it's like.
But we've all harassed that office.
Yeah.
Raise your hand if you've harassed those
big
poor
time.
people.
And
being like,
and there's times of the year when they're super busy, and like at the start of the program, it was bonkers and like
jumping.
So like it's gotten better.
But it's forgotten now.
Yeah.
No one talks about it. Like, once again, this program comes out, you get all the realtors, game changing. It's like when an interest rate gets cut, or even fucking holds. Interest rate has held today. Bank of Canada holds key lending rate. Thank you. Nothing's changed. You've told me nothing.
Actually, no,
right?
they've told you what the Bank of Canada rate is for the government, because everybody posts the 2.25, which isn't actually what the rate at the bank is. That's what the Bank of Government.
We've heard that. We've heard your rant
and
on
it's
this.
just, I'm like, come on, let's get the numbers right. But
essentially, though, like, what should have been is, this is a new announcement from the Nova Scotia government regarding 2% down payments. If you're saving for a down payment, here's another option for you to have another way to access home ownership. But this thing right here that we've all forgotten about, Nova Scotia Down Payment Assistance Program, this is the program. Fuck saving 4.5%, save 2.5%.
If they truly,
it's the same in HRM.
If they wanted to affect like the price, I don't know, man. Just make a secret program where you give everybody a nice big GST rebate after they buy their first time house, and give them back 50 fucking grand. You know what I mean? Like, that might move the needle. But like, again, it's just a waste of.
The thing I don't understand about this program, if I look at it logically, like, you're already giving away down payments. Like, you're already giving away down payments with the Nova Scotia Down Payment Assistance Program. You do not need to step into down. You have a great product. Just better market it. Just better advertise.
No, I can totally clarify that last part for you, why you don't understand it. Because it has nothing to do with what they absolutely said it was fucking for. This is a PR stunt. It's a but think of it logically. It's a PR stunt.
Hold on.
The credit unions already have 0% down programs.
That's a thing.
That's a thing.
The credit unions have 0% down programs for first-time home buyers.
They have them. Now, word to everybody out there, brokers can't access them. You go directly to the credit union, but they exist, and they're a thing. So all they've done is they've been like, okay, it's community-based bank. They've already got some pretty great programs. So like, we're going to piggyback off that and say it was our idea.
Hold on. The other thing, though, is if you want to make homeownership accessible, deal with closing costs. Like, instead of attacking friggin' down, you already have a great down payment program. Why is it down payment? Go to closing costs.
In the same 30-day period from when they made this announcement, and you go back 30 days, they're talking about wanting to increase the D-transfer tax in the HRM to 2.5%.
Yeah.
So it's like, talking out of both sides of your mouth. Like, what are you doing? Like, you're pissing in my ear and telling me it's raining. Like, what the fuck is going on here? Like, there's a clip for you now. But like, to me, it's just such a disingenuous thing to be like, "Oh, well, we're solving it." No, you're not. Like,
Yeah.
and it's like, "Okay, listen,
Like,
you could be the bastion of positivity and try and spin this 16 ways from Sunday, but until you actually, like, work the math out, which unfortunately most people that are probably saying this is the best program since sliced bread probably aren't doing the math, it's just structurally not, right? If you were to look at this, if you're in this for the best thing for the client and their financings or their financials, it's not the best program. If you're in this just to, push products, sell houses, and do your stuff, then that's sure. But
but
like, I
but
want my
it is
client to
it
be
is
successful in their house. I want them to be able to get to an equity position that they can actually have some type of upward mobility because of the asset they have. And if you get in at
yeah,
2%,
could you imagine if they put out this 2% program and then next month announced they're raising the transfer tax to 2.5%,
I
so you're still at
absolutely could
5%?
imagine it, and we would all
Like,
still have people on Instagram saying that things are fucking roses and gumdrops, but it's like, it's the irony of when you deal with the government. Like, they're like, "Oh, let's raise property taxes 10%, transfer tax 2.5. Oh, but by the way, here's a crumb for a cool new program that, like, from a high level, the number 5 and the number 2 are different, so, like, that looks awesome. So, like, I'm saving that 3 in between, but, like, that's all it is. It's just a way for them to be like, "We've done something," but you haven't, though. You've teamed up with a bank who actually already came up with this idea and, like,
yep.
already have it in play, and
That
so
was the other thing. No, like, credit union has had a first-time homebuyer 0% down payment program
for a
for
few
years.
years. Yeah, yeah,
I had a client use it 4 years ago.
yeah.
Like, it's been years active. Once again, bad marketing, bad publicity. Nova Scotia, like, it blows my mind. Like, I remember saying I sat down with clients or new buyers last week, and I was like, and they're like, "We're saving up for the down payment." I was like, "How much do you have saved?" "About 18 grand." "Where are you trying to buy?" "Greenwood." "Oh, where houses are $400,000? Congratulations, you have closing costs." "What?" "So, Nova Scotia down payment assistance program. Get after it.
Like,
Already shopping."
I can't with this program, man. I can't. It's just
Okay, hold on. Can you I wanna get down to the needle here. Is it the program or is it the game changer from all the fucking celebrating realtors? It can be column A and B. Doesn't have to be.
program the program is frustrating enough just based on its own merits and how, like, even I've had so, like, I'm away now, okay? I'm away last week, and the phone lights up like a fucking Christmas tree because of this program, right? And that's fine. Available anytime for my clients, even when I'm in Aruba with half decent Wi-Fi. Um, but when I explained it to them, they're like, "Well, this sounds like shit." And I'm like, "Well, if we're comparing it," like, literally, and they're like, "But, like, why would I do this if I could do the other program?" I'm like, "Right you are. Why would you do this?"
Right,
Right? And
right.
it's like, yeah, so, like, to me, it's sad enough to see the big announcement from the government and how, like, pat themselves on the back they are with it when really it's again, it's just smoke and bullshit mirrors. To your other point about how it gets pumped on Instagram and everywhere else, unfortunately, that disappointment train left the station long ago for me once I got into this industry. It's usually every few days where I'm just like, "Oh, yeah." Um, but yeah, it is
Okay.
not what they say it's gonna be. It's not like it's like saying somebody it's like what did I hear somebody say? They're um, like giving somebody a ladder when their house is on fire and being like, "Hey, it's fire prevention." Like, the fucking thing's already on fire. Like, what's this gonna do? Like, you know what I mean?
The, it just to bring this back, this is a pilot program. Now, they are testing it out. What I will say, if this pilot program is successful, there will be a lot of fucked over people.
Hope. that it's made very clear to them by either their broker or the person at the bank as to what this truly means for them
Hold on.
and what opportunity out there is contrary to this.
Hold on. You say broker or bank. The program, the words on this thing, which once again will be in the show notes. You do not need to submit any application to the government for this program. Program eligibility and enrollment is completed as part of the mortgage application process completed by credit unions.
Yes, so
They're not telling you that.
bank's not. Like the
So
bank.
and you like the fucking the the website, the government website says go to credit union. There's no broker in there
Oh,
to
well,
be
listen,
like, "Hey, don't do this."
I don't expect the bank to be like, oh, go find a licensed mortgage broker and speak to a specialist or sorry, the government. But like you can still facilitate this through a mortgage broker like anything else. Even with the down payment assistance program, the only difference is I have to tell you to go meet them in the office so that they can do the paperwork. All they're saying is there's no office meeting, there's no paperwork on the government side. So like I would submit to the credit union just as I would any other file. It's just you don't have to go sit with the government office anymore. The bank's going to take care of it. So like my hope is that folks sit down with people that actually, oh, I don't know, give two flying fucks about what might actually happen to them in a couple of years. Because it's like, again, you need to, the prepayment privileges aren't as great at the credit union as they are elsewhere. So even if you get into the mortgage and you juice it and try to do it as fast as you can, like you're still not going to get there in that
So
first 5 years, right? So like you need to be aware of that. And this whole like, oh my God, if I see another one where it's like they're getting rid of the mortgage insurance, they're not getting rid of it. They're stashing it in a drawer over there and it will come back out at a later date. That's like saying, oh, well, all the dirty laundry's gone. Or like when you're eating your plate and you're just like, I ate my dinner, Ma, and you pushed everything to one side. No, you didn't. The fucking
or let
mound
the
of
dog eat it.
potatoes is covering everything over there. You know what I mean? Like you didn't do anything. It's all still there. It's just over there somewhere now, right? Like, come on. This was
So
fun.
summary,
This was fun.
no juju. Bad juju.
Listen, there'll
Just
be, and again, I'll try to err on the side of positivity. I'm sure this will be a program beneficial to somebody out there. Okay, I'm sure
and
somebody's
until
gonna
until we get
fit that
until
right
they get to
bucket.
2031.
You
Until
know,
they get to
and
2031.
and maybe like, all they need is the roof over their head and like they're not looking for, HELOCs and everything else. And they just want to set it and forget it and just have a house and rock and roll and continue on when their merry way. It may fit well for them.
Hold on. I just want to be clear, very, very clear, and this is my opinion, so shoot the messenger. If you manage to squirrel away 4.5% to buy something with this 2% down payment program, and your realtor or broker is not telling you to go Nova Scotia down payment assistance program for a 10-year 0% interest free down payment covered that you pay in small increments over 10 years, they're doing you a disservice.
It is the
That's
wit.
just
Listen, it's the flash and panache of like, oh, 5% is now 2.
how
Okay.
about free? How about
Yeah.
free?
Well, these guys,
That one, uh,
these arseholes over here are going to give it to you and make you just pay it back at no interest in 10 years. They're the same arseholes involved with this program over
the
here.
the other thing is like if you okay, Nova Scotia, this is the last thing we're gonna get out of here. You go Nova Scotia down payment assistance program, you get 4.05% on the interest. So now you're saving $2,400 a year.
Yeah.
In 10 years, that's 20 grand. That can be your payback. But even then, you are you can in 5 years' time, you have more equity in your house because you're
Look,
not paying as much in interest. Hold on. If you just sell the fucking house in 5 years, you will have made enough equity to pay off the down payment assistance program out entirely, and then have enough for your down payment to go buy the next fucking house.
yeah. Yeah. Whereas if something happens and you have a change of life and in the first, say, less than 5 years of your term at the bank, you don't, and you got to sell the place, who's covering the difference?
Right.
Right. So, like, to me,
Right.
it's just, there may be a select pocket out there that this works for, and go with God, my friend, and do it. If it works for you, great. But like the rest of us, no. And like if you're making 200 grand and you're targeting this program, give your head a shake. Like it is not what's best for you.
Give
Like
your head a shake.
that is just no. Like I'm sorry. And yeah, there's better stuff out there. This is all just lip service and just to say we did something when you're not. No. It's not gonna make a
All
goddamn
right, sir.
cheaper. No.
We have I think we beat the horse to death,
This
if
was
I'm being
great. And
honest.
you know what? I think the audio improved.
I will stay on the line when I hit end just so that it will upload because I'll check the audio right
I
away.
think the trick
But
is
as
I have
always,
to
sir,
yell more.
that
That is
might
the
be the
trick.
trick is you
Yeah.
just scream.
I just gotta just
Well,
wind me up and let me go.
all right, sir. As always, thank you. Do not exit right away. We're gonna chat another for 5 minutes off air.
All right, buddy.
Thank you.
Yeah.
All right. Thank you so much for listening to the podcast. You can find additional information regarding the 2% down payment program in the show notes, as well as mine and Matt's contact information if you're interested in getting in touch. Don't forget to subscribe. Thanks again. Bye.